Good day, ladies and gentlemen. It's Eric Coffin. I'm speaking to you from the inaugural Metal Investors Forum in Toronto, day before PDAC 2018. I'm here with the CEO of Orezone Gold, and I wanted to give Patty a chance to walk you through what's coming the next 2 or 3 months. I think it's going to be pretty pivotal for Orezone and for its valuation. There's some pretty big metrics, pretty big milestones you're going to be passing through in the next 2 or 3 months. So can you sort of give us a timeline on some of this?
Well, we're right into feasibility right now. We started in January. We went down to site with all of the engineers at the beginning of February, so we've all done all our site visits. We're well advanced with that right now. The longest really time frame is really just putting the final bits of the mine plan together. I think we're pretty confident and close on what the capital and operating costs are right now. They're not going to change much but from what we've seen between now and then. So I would think by June we should have all of that into the market. You know, we are continuing to drill, but we see this feasibility and the numbers that will come out of this as really a catalyst for the company going forward.
Okay, now obviously you're not redoing the feasibility because you're some sort of help engineers get their kids through university charity. You're doing another feasibility study because you're pretty confident the numbers are going to look a hell of a lot better.
Yeah, we've changed the flow sheet significantly. It's much simpler now. We're focusing on all of the free dig material. Previously they were taking the lower transition. We think that would be about 3 million tons of 60 of what we think 60 will be the reserve, more or less. Right. So it's a minor part of it. And by removing that, we've completely simplified the flow sheet. It's all free dig. We've removed what was a heap leach in there, which was probably $30 to $40 million of capex. Right. We've done all of the test work now on the leaching. It leaches very fast on a CIL, 24 hours. Low cyanide consumption, low lime consumption, extremely low power consumption. We've actually visited one of these projects in Mali. A really, really simple project. So we expect that the capital, the previous one was about 260 million. We would expect to be more than 100 million less than that. So something in the order of 140 to 150.
And that 250, just to give people a sense, that the original feasibility is 250. Can you refresh my memory what the IRR was on that?
It was about 24%.
Okay. Okay, well you'll lop 100 million off of that. I don't know how many of you people remember your MPV calculations in university, but the IRR is going to go up. It's going to be up in the 30s.
Yeah, it's going to be in the, I think it's going to be a very compelling IRR. And also the margins, you know, now we're going to be looking at contract mining. It's all free dig, no ground contact wear on these types of fleet. Right. No big sustaining capital for us. The wear index of the ore is around 0.05, so we're not going to be replacing mill parts and agitator parts and pump parts. Right. So the sustaining capex going forward is also extremely low. So our margin on all-in sustaining, we think, will be one of the better ones in the business.
Now, I mean, you're talking Q2, right? That's correct. When you have the feasibility. You're also drilling these higher grade areas that are relatively new, or at least the sense that they're hanging together is relatively new. And I know you guys can't get that done ahead of the feasibility, so there'll be a couple of other important releases after the feasibility even.
That's correct. So we started drilling those, we identified them last year by the middle of the year. We put our theory together, we did our modeling on them, and we started drilling them around the third quarter of last year. The results were very compelling for us. Now we're seeing these things. They're somewhere, some of them are like 800 meters in extent now, you know, continuous. Right. They're totally different than in terms of the way they plunge. The main ore body dips at 55 and dips at 55 along 11 kilometers of strike extent. These are plunging at 22. They're anything from, you know, 2 to 3 meters to 20, 25 meters. The grade is in the, you know, we're seeing things at 30 grams, but in average 4 to 5 grams would be the type of grade. But from our point of view, you're going to see them within the same pit. We wanted to get it, you know, we were hoping to get it done, but because we're still drilling, they're still open, right. And we're modeling an 11 kilometer ore body here. Right. It'll only be ready around about mid Q3. Okay. And if we waited to then remodel it on top of that for the feasibility, we would be the end of the year.
Right.
The project on its own is, we think, is going to be highly attractive. When you add these higher grade zones in, it'll just make it more attractive. No more tons to the plant, just better grade.
Okay, and I guess the idea is once you've done that, you'll just sort of do an addendum with essentially everything the same, but the grade lifted on a new feasibility numbers.
That's what will happen. We'll put out a new resource, and then we just update the economics. The tons will stay the same, the operating costs will stay the same, no change in capital. It'll just be purely gravy into the system.
Okay. And just as a final note, I mean, Patty and I were talking before the camera started rolling, and it occurred to me that I think it's important for the viewers to remember that Orezone, because they had gone most of the way through the process of the original iteration, you always think in terms of PEA, feasibility, permitting. You guys you've done the permitting. This thing is good to go, basically.
This is fully permitted. We can start construction as soon as we're finished the feasibility. We will go right into detail engineering. We would expect, if we're building it, we will be starting at the end of Q1 2019.
Okay.
So this is fully, we do not have to go through a permitting process. It's all fully done.
Right.
So we're ready to go as soon as we get the economics out, push the button, get moving.
This is a story, I mean, I've harped on this one a couple of times in the last, probably 6 to 9 months. I mean, it's one, of the gold developers, I expect Orezone's going to deliver a big positive surprise in this updated feasibility. And the kind of numbers that Patty's talking about, I think will put Orezone, even though Patty doesn't necessarily want it, I think it's going to put you guys pretty close to the top of the list of potential M&A targets. Pretty compelling set of numbers, even though I think you wouldn't mind actually building the thing.
I'd love to build it. I mean,
yeah.
Absolutely. I mean, we've been behind the change of the flow sheet. We'd love to do it, but we're all big shareholders, including myself. So if the right deal came along, of course we'd look at it. Bearing in mind, we've also got 3.5 million ounces of sulfide sitting right beneath the oxide.
Sure.
So this is a big, long life asset,
right.
And obviously people are interested in it.
Okay, it's a great story. I think you guys want to take a look at this, pay attention. Thanks for coming in to talk to me, Patty, and for being part of the inaugural MIF in Toronto.
No, our pleasure.
Thank you.
Thank you.